If you're a public sector employee in Alberta, you've probably heard about your pension plan, either the local authority's pension plan or the public service pension plan. Your contribution rates have been going up, and some politicians have started saying your plan is not sustainable. The good news is you don't have to worry. The plan is sustainable. In fact, your increased contributions, which are matched by your employer, help ensure that sustainability. And what no one is telling you is that those increases in your contribution rates, which began in 2002, will start to be reversed beginning in 2017 for the PSPP and 2018 for the LAPP. Then why are politicians talking about sustainability? Well, it's a political decision. Some politicians just don't like the idea of pensions, even when study after study shows pensions are the safest and most reliable way of saving for retirement. But let's take this back to the basics. Right now, the pension plans have 80% of the money needed to pay the pension owed to everyone who is currently enrolled. So why aren't the plans funded 100%? There are a few reasons for that. First, when the plans were set up, people didn't live or work for nearly as long as they do today. A little morbid, true, but it matters to pensions. That's because the longer a pensioner lives, the longer they collect from the pension fund, and the more money that is needed. And the longer people work, the higher their pension benefits. Those two factors mean we're paying higher pension benefits for a longer period of time than ever before. It's a demographic double whammy that wasn't accounted for when the plans were designed, and now we're catching up. But that's not the only challenge. Pension funds, like every other type of retirement savings plan out there, had to deal with the fallout of the economic meltdowns that started on Wall Street and spread across the globe. The first big hit was the dot-com bubble that burst in 2000. Major stocks like Cisco dropped 87%. Altogether, markets lost $5 trillion. Everyone thought our stock market troubles were behind us until the housing bubble burst in 2008, sparking a global financial crisis. Financial companies had created exotic financial products for the stock market, like collateralized debt obligations and mortgage-backed securities. Those new products were based on subprime loans lent out to people who shouldn't have qualified for them. Frighteningly, most Wall Street traders didn't understand the new products, and those that did ignored the risks. When the housing bubble burst, thousands of subprime loans went bad, the financial products that were based on the loans did too, and the stock market collapsed, dragging down investments at a rate not seen since the Great Depression. Both crashes decimated personal retirement savings plans. Pensions weren't as badly affected because they take a conservative long-term investment strategy and share the risk. Now one of the biggest challenges pensions face is record low interest rates. Central bankers in Canada have set interest rates extremely low, currently just 1%, in order to help the economy recover from the financial meltdown. Those historically low rates also mean lower returns, especially for conservative investment strategies. All these challenges are part of why employee and employer contribution rates to the pension plans have climbed over the last few years. So what can we do while we wait for the economy to turn around and interest rates to increase? The number one issue that needs to be addressed is proper governance of the plans. Right now, even though employees make half the contributions to the plan, they don't have an equal say in how the plans are managed. The government controls crucial aspects of the plan and holds final authority over your pension. There are fully funded public sector pension plans in Canada that are jointly governed by employees and employers. We want to emulate those plans, but as the representatives of employees like you, we don't yet have the authority to make the changes needed to put the plan on a solid footing. We are working on it. In the meantime, we want you to know that your pension will be there for you when you retire, and it's still the safest investment out there.